Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so we're just hugging this 9-day. We have been for going on 5 sessions now. Hourly chart, you can see yesterday, last week was all about consolidation. 3 separate consolidation zones. We expanded out of it Friday afternoon, and we could, I could just as easily draw another one here. The key with this, though, is you have the 9-day, which is your blue line, and the orange, which is your weekly pivot. They were tested yesterday. They took it down as low as 67. They bounced there, did little matching lows. On the hourly, took it up into the end of the day. And they continued to test it here and here. So the whole day was really about testing those areas, and so far having those areas hold up. They took it right back there in Globex. Your low off the Europe Open, 71.25. They went back and did 70.75. Made matching lows on the 5-minute chart there at about 5:15, 5:20 this morning, and we're up off of that. Now, the bulls are struggling a little bit with this whole 46, 80 to 46.88 area. They spent about 20 minutes up at 83.5 around 7 a.m. this morning. Weren't able to get through. So we're still in a little bit of a zone. But the bottom line is there's only so many opportunities, so many chances that the bears are going to get to convert the 9-day and the weekly pivot. And if they can't get it done, then over time, what you're going to get are new all-time highs. That 47.11.75 doesn't have a chance of holding up at that point. And you start making new highs and higher highs, opens up 47.50. We head into the end of the year. And, if the bears let go of the rope, the balloon's going to go up. The question is, do the bears have the fortitude to convert huge key short-term areas like the 9-day and the weekly pivot so that they can get down to more meaningful areas like the daily midband? That remains up for discussion, but the longer this looks like this, the more and more likely the answer to that question is no. And then any test we get of the daily midband is going to be a function of time. So let's go back to the daily chart. It's going to be a function of time. You can see the line lifting as we shed these lower prices. Function of time instead of a function of price, which is what they were trying to do here if they could have taken it down, directionally down another session or two to test that area. And all this does, for all of the discussion of it, all a test of the daily midband does is basically take it back to a bullish baseline where the bulls would have an opportunity to reload and take it higher. There's nothing bearish about going back to the daily midband. It's what it's supposed to do. You don't get into bearish stuff until you get, down to lower band. The 50 is here. The 100 is, miles away. We are certainly in an uptrend. And spending a few days at the 9-day without converting the 9-day, there's nothing bearish about that. So you have to decouple the news from price. Right now, price says the 9-day is support, weekly pivot is support. How does that get fixed? Well, it goes back to our two-step rule, right? Close below these lines and then stay below them for the entire following Globex. Not part of it, all of it. They tried it, couldn't do it here. They really tried on Friday, and then they gave it up. This was a good chance for them on Friday. They couldn't hold it. All right. Other areas on the chart. So that weekly pivot is 71. 9-day 73. Hourly midband and VWAP, volume weighted average price, are both coming in just under 79. Call it 46.78.75. And you got the daily pivot there, 81.83. Our proprietary moving average is 77. So let's see how it opens today. But look, it's advantage bulls as long as we're above those 2 lines. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well, and I'll talk to you soon.